Hi there. This is Bob Graham with Riggs Asset Management Company. Today I want to talk about, what's going on around the globe and specifically the conflict in Iran and how that could affect uh, the economy, markets, and ultimately our portfolios. Before I do that, I just want to reach out and say, to the soldiers, sailors, airmen, Marines, guardians, the young men and women who protect our country, who are around the globe, uh, our thoughts, our prayers are with them. And we look forward to having them home, hopefully soon, healthy, well, so they can reunite with their family, their loved ones. Having said that, portfolios are actually doing well. Uh, you know, Before this conflict started, our portfolios were doing well. And really, since this conflict has started, our portfolios are holding up really well through this, what is it now, a week that we've been into this conflict. So at least so far, things are looking pretty good. We are looking at the markets. We're taking advantage of opportunities when we see them. And where we think we have some risk, we're making changes to mitigate that. So we're remaining vigilant and proactive through this entire process. But our thoughts are right now that, quite frankly, we're pretty well positioned. And at least for what we see coming down the road, uh, we really see this as a opportunity that we can take advantage of for better gains as we work through the, let's say the last 2/3 of this year. So let's talk about really what's going on and how it affects the global economy. It's not really um, Iran. Iran's not an economic player in any major sense of the term, but it's really the Middle East and the Straits of Hormuz. So if you think about it, roughly 20% of all the globe's energy passes through the Strait of Hormuz every single day. That's, natural gas, that's oil, that's, other refined products. So if you want to put that in perspective, uh, the world consumes about 100 million barrels of oil every single day, and about 20 million of that comes through the Strait of Hormuz every single day. So the largest impact of this is, quite frankly, Asia. Asia gets about, 85% of its energy from the Middle East. So if, a large amount of it comes from that particular area, Asia is really affected. And we're seeing that happen. We're seeing that in markets. So if you look at Japan, the Philippines, China, Vietnam, all of these markets are being affected. Now, right now, their economies aren't affected yet, but if this prolongs, we could see that down the road. To a lesser extent, it affects Europe. Depending on how you measure it, perhaps as much as 40% of the energy that Europe consumes can come from the Middle East. Here in America, we're energy independent. We're energy sufficient. In fact, we are a net exporter of natural gas. We are a net exporter of oil. So while the price of the pump is an issue, or the way it affects businesses, think about someone who owns a quarry or an industrial plant or something like that. A large portion of their operating expenses comes from the consumption of energy. So from that perspective, it can be a bother, it can be an issue if this lasts for a very long time. But, you know, having said that, the US really is not affected by this, except from a headline point of view. Now, we have seen oil prices rise, so we saw West Texas Intermediate go from about $57 a barrel to 81. So that's the oil that actually comes out of West Texas. We saw Brent, which is the oil that comes out of the North Sea, go from about $60 a barrel to 85. If this continues, then I think you could see a slowdown in growth and maybe some inflation down the road. And we'll make changes to, if that continues to offset those things. But right now, that's not what the markets are telling us. What we're really seeing is, at least from the market perspective, whether it's here, whether it's in Europe, even the Asia markets, what we're really sensing from market activity is that this is deemed right now as more of a short-term issue, a bump in the road versus a major issue. But we're going to remain vigilant, and we'll see how that works out. Having said that, interestingly enough, historically, February tends to be a soft month. The first part of March tends to be soft. So as we get into mid-March, it wouldn't surprise us to see a bottom in this market and see the markets actually turn up from there. We'll see if we follow historical trends or not, but it's something we're watching. So having said that, we talked earlier, going into this period, going into 2026, we thought it was going to be a bumpy market. We have prepared our portfolios for a bumpy markets. We think it's going to be 2 steps forward, 1 step back, 2 steps forward. And that's what we're saying. But, your portfolios are right now in a really good position. And I think certainly well positioned for what we see ahead of us. So anyway, if you have any questions about, this video, whether it's a personal financial question, a business financial question, reach out to your Riggs team member. We're here to help you in any way we can. Thank you very much.